Good day all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, and we're now at the 16th of July 2019, getting close to 4:15 p.m. Central Daylight Time. Well, as you can see, a red day in the grains, as remember, you get these periods in the market where it gets hot, then it cools down right away, you get rain amounts. This is typically the best part of the growing season. So the market had run up in all the grains as a group because we got worried about in June planting, acreage, what was planted, getting rained out, and so on and so forth. Now whatever's planted, we're worried how is that growing, and each day that goes by, whether you get a hot forecast, a cool one, as the shifts in it happen, so shifts the market action. So we're in a correction mode in corn, wheat, and soybeans. That's one way to look at it. Another thing to look at is the dollar jumped rather smartly today, putting more pressure on the market. And then President Trump again said, basically, we're still far away with China. Nothing really going on there. And that put additional pressure on the market. And it took the energy markets down when he said that as well, because if you're not going to make a deal with China, world demand suffers in the energies, and boom, you come down. In addition, in the energies, of course, now they're going to get the people on the platforms back and start getting out in the Gulf, all those going, and of course the other areas that were cleared out for Hurricane Barry. So when we take a look at the market, you can see you've got a pattern where you've taken this market up in different stages, made higher high closes, and now we're backing off. The market's sitting here right now around 887 and 3/4. The support of the market is back in the 872 level, let's call it. Doesn't mean it has to go there. I'm just saying that was where the 18-week moving average of closes is, of closing prices. When we come to a daily bar chart, you see how the market corrected yesterday, and you're getting that follow through today. I think on a lot of traders' minds will be, how does the market in the Nov beans handle this 890 area? That's what I'll be looking at too. When I put on the swing line, I can see that the pattern is one of a lower low and a higher high, and that's what a swing line helps you do. It helps you to identify that, which I think is so important for those of us looking for trend, support, resistance, or where did the last part of the market stall out or start from. When I look at what the market did, I'll stick with what I said yesterday. Yesterday we were coming down and we said first support 18-day moving average of closes, second the 100-day. The close today at 906 actually closed under both of those. So on the way up, it wouldn't surprise me if they act as a bit of resistance in the market. As for where the market could find support, well, I'm going to still say the lower Bollinger Band. Why? If you take a look at these black bands, they're called Bollinger Bands. They're an algorithm designed to keep the market trading within them 95% of the time. And a lot depends on the pattern you're in as to what happens when the band gets hit. When you have a very narrow pattern like you did here, it's easier to get a lasting move. When you get a pattern that is broad like this, it's much more difficult. So often you'll get down to that band and you get a bounce away from it. The question is how much, and that's always the art of this. But if it bounces, where's it going? Well, in this case, number one, we haven't gotten there. Be a pretty big break to get there, because that would mean you've gone from 936 down to the 890 level. That's about a 50-cent break in round figures. It could certainly get there, but I'm still seeing this as the resistance area, and key is we're not trending. I can also tell you momentum has been waffling. It had been pointing up, now it's trying to point down a little bit. The bias, I'll call, in the market is down because you're under the 18-day average of closes, and I'll call it trendless right now. In the meal market, it seems that the 18-day average, generally speaking, is proving to be the resistance zone. You hit it all through here, couldn't really go anywhere. You tried to find support in the market at the 100-day average on the pullbacks for 2 days, and today it's backing off. So like the soybean market, we have this pattern of a lower low and a higher high. We had momentum trying to stay up. It sort of flattened yesterday. Now it's trying to push down. Support if the market continues to break the 304 level in the Bollinger Bands, and on rallies, what had been support, that 312.70, likely becomes the resistance with the combination of the 18-day average at 313.90. But again, no trend. In the soy oil, momentum is trying to take a hit to the downside. The bias on the day finished down as the market closed under the 18-day average, but the swing line's up. I said it yesterday, I'll say it again today. Via what the crush is doing, this is really just, it's the tail of the dog as everything is being pulled around by the meal and the soybeans. In the corn market, you've still got a pattern of higher lows, higher highs. The market for 3 days in a row now, actually 4, has hit this 18-day average of closes, slipping down on it. Momentum certainly not pointing up, but it's not convincing to the downside either. Yet the bias is down because you're under the 18-day average. I think this market is pretty well defined by this lower Bollinger Band and that higher one when they got hit. And you've stayed within those bands basically at this point in time. In the wheat market, the rally to the 18-day average discovered a lot of resistance after you came from an upper Bollinger Band to the lower ones right here. So again, I am not seeing a trend in just about any of the grains. I'm seeing them with higher highs, lower lows, not really doing too much. Where you still have a downtrend going is in the sugar. You finished at $11.99 today. It's 2 days in a row under the lower Bollinger Band in an oversold market. It might have overdone itself, so you got to be a bit careful with that. In the coffee market, yesterday you had this huge reversal to the down. I think it was yesterday. Oh, no, huge reversal to the upside. Market was up 360 points. You can see the 18-day average became and stayed a pivotal number there. You had not turned the trend up. You had a lower low, higher high. All of a sudden today, you come crashing back down at 105.55 at the end of the day, hit the 18-day average again, and now you're down. This is a market void of trend. It is just whipping back and forth here. I wish everybody that trades it the best, but it's difficult when you do that. In the cocoa market, you've gone from the upper Bollinger Band in one swoop to the lower band. The market grabbed traction there and was able to close higher. It is oversold, void of a trend in a broad trading range where it has done two things in this. It has extended the top and extended the bottom on it. Should it continue down, I'd look for the 100-day average. Should it rally from here, I'm going to look for the 18-day average to be the resistance. More important to me, oversold, void of trend. In the cotton market, the market is trying its best to hang on here. All it did is it got under an excessive amount, about 4 days under the lower Bollinger Band, got over it yesterday, still going sideways, but there's a ruling factor here. When you have an embedded slow stochastic reading, which means the numbers that make up the slow stochastic momentum oscillator are both going sideways under 20 and do it for several days or more, it means that rallies in the market are unlikely to be met and met well by sellers waiting in this market until that red line closes back over 20. It's showing no sign of it. The trend is down with lower highs, lower lows. I expect the sellers to still be active in this. In the cattle market, you have the flip-flop of the cotton. You've got the bullish embedded reading, and the market is keeping the pattern of higher lows, higher highs. Each time the market has hit that upper Bollinger Band, it's pushed it out and then immediately withdrawn. Doesn't seem yet that the market wants to get on a bent of just running to the upside. If it did, I'd look for resistance between, let's call it the 111 area and the 112, these two numbers. If the market breaks under yesterday's low, which is 101, what was that? 108.72 and a half. As long as the embedded reading stays in place, I'll just consider it, yeah, you've stepped out of the swing line, but this is the ruling factor on the chart. In plain English, until that red line's under 80, I think the market gets support on price breaks. In the feeder cattle, it's the same story. Until this market sees that red line under 80, I think these pullbacks get supported. Now, admittedly, the market has backed away from the upper Bollinger Band. All this sideways action is now taking place. That is what I'll be keeping my eye on. If you lose the embedded reading in the cattle, or the feeder cattle, the live or the younger cattle, then I'll look for the 18-day averages to come into play. In the hog market, I think it's close to running out of its momentum to the upside. I say that because you're approaching the upper Bollinger Band. You're in overbought territory. I'm not bearish. I just think this move that has been rather nice to the upside is going to run out of a little steam. And of course, hearing again that we're not close to a trade with China, well, it takes you away from thinking for the grain market or for even pork purchases. Maybe we won't get that much as China and the U.S. play, if you will, hardball with each other. Now, let me just show you. See what you see behind there? And just so you can see this is actually my phone doing the same thing. And what we did is, this is how big I made this so I could read it. Yes, you can go back to the smaller numbers as just about every other service has, but I've got to tell you, I like reading, and I don't want to do like that when I'm looking at what's going on here. You're going to get streaming quotes that you can set up. And you can create this with a, if you will, a flair for the agriculture markets, the financial markets, whatever you want. Easy to view charts. I think viewing everything is very important. If you have an account with us, you can trade right off of it, right around the clock. Now, set up price alerts. A lot of places don't have that, but you're going to get those on this. Now say things like this. It's pretty cool. It can also repeat for you all of this, text to voice, what you want, voice command. If it's in your home and you've got these Alexa and Google products and so on, we put it on the phone. It's so simple to do. When I'm driving, I'm not sitting there going to kill myself. You like my videos? They all come in here, by the way. So that's the other thing. This is the traditional view, and it is available to you. And weather. All the news that we put out, and you can get it the ways that you want to set up agriculture, the other markets, you figure that out. It's pretty simple. You'll need a user ID and a password. You can download this for absolutely free from Android stores, from your Apple stores. It's there as well, but you're going to need that free user ID and password from us to get all this and give it a try, and I think you're going to love it. Simply go to our website, sign up for the free trial. You can call my staff. They'll get you set up in no time at all on it either. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.